In 2020, comparing Tesla to Uber is like comparing apples to oranges. But as a long-term investor, I'm looking much further down the road. And there's a good chance that Tesla ends up eating Uber's lunch and dinner as well. I have many concerns with Uber as an investment, although one problem really comes in well above the rest, and many other investors have overlooked it. I know I did for many years. So that's why I'm sharing this research today. I've been following and using Uber well before it traded publicly. I've watched its valuation climb and fall over the years. Uber went public in May of 2019 at $45 per share. And at that level, it valued the entire company at a whopping $82 billion. Since Uber's share price has dropped below $15, but over the last 2 months with the broader stock market, it's rebounded a bit. It's climbed back above $30 per share. It's trading at a discount compared to its IPO price, although even at this level, I wouldn't touch the company with a 10-foot pole. That's from a long-term investment point of view. As a customer, I still plan on hailing the occasional Uber ride, or Lyft, whichever is more cost-effective at the time. As a customer, I clearly find value in Uber's services today. So for some, that begs the question, why won't I invest in Uber? Well, as a general piece of investing wisdom, just because you like a company's product doesn't mean that the company's stock is a good investment. It might or it might not be. It just really depends on the company's current valuation and future cash flows. Being able to better predict what future cash flows might be is going to allow you to make better investing decisions. So with that in mind, one of the first big concerns that investors bring up is Uber's unprofitability. And with this chart that I have for you, you can see revenue has climbed over the last 2 years, of course up until recently. And earnings per share has been volatile, but the past 4 quarters over the previous 4 quarters are down. This isn't a great sign for investors, although this alone doesn't really worry me too much. Other tech giants have proven that sustained short-term losses can lead to longer-term profitability. To compete and grow into more sustainable businesses, they need to invest aggressively. Now, before we dive into my main issue with Uber and how Tesla comes into the picture, I'd really appreciate it if you just tap the like button down below, as well as subscribe to my channel. That way, you'll be the first to know when I've published new research. And honestly, it just motivates me to continue spending long nights and my weekends putting this research together. So if you tap that like button down below, thank you. All right, for years, I've been saying Uber's best path to profitability is by replacing its drivers. At the end of 2018, which is the most recent stat I could find on its website, Uber reported having 3.9 million drivers. And there's an active debate online about how much of the cost per ride goes to its drivers. But after digging around, as well as talking to a few Uber drivers, I'd easily say over 50% on average goes to drivers. So with even some variability with that number, it's a huge cost for Uber. And that doesn't even factor in hiring costs, related taxes, and legal fees. For example, Uber ended up having to pay $20 million to settle a lawsuit over how it classifies its drivers. As a result, Uber is really banking on self-driving cars lowering these costs. The company is spending top dollar to build its own self-driving car hardware and software. Before going public, Uber announced a $1 billion investment going into its self-driving car group. A good chunk of that came from Toyota. And on top of that, Uber has also built partnerships with Volvo and other big brands. All this sounds great, right? No doubt Uber is making some good moves, but unfortunately, I don't think it's going to be enough. I see the future of self-driving cars much further out than many experts have proclaimed. 5 years ago, in one of my old reports, I predicted wide adoption of driverless cars is at least 30 years away. Now, even with 5 years of new data in the door, I still stand behind that prediction. The timeline is far out, and in the meantime, Uber is burning through cash. The road to profitability, in my mind, isn't looking good. And to make things more challenging, other big companies have really ramped up their self-driving research and development. Competition is really becoming fierce, and some of the leaders in this space include Google's Waymo, GM Cruise, Argo AI, Lyft, and my favorite, Tesla. Love him or hate him, Elon Musk has a proven track record. I'm personally a huge fanboy of what he's accomplishing for humanity. And have I invested in Tesla? That's a question for another time. If you want to find out, you can drop a comment down below. Elon Musk has already disrupted a few industries, but he isn't resting on his laurels. Tesla has recently reported a few quarters of profitability, and that's a major feat due to high barriers to entry as well as low margins in the auto industry. Tesla's achieved this by becoming better vertically integrated, and also Tesla has extremely valuable driving data, which its data sets continue to grow. This is giving the company a huge edge over its competitors. So unless some big tail risks come to fruition, I believe Tesla will dominate the self-driving space down the road. With that said, an important question to still consider, what does Uber have that sets it apart? In my mind, its number one moat is its well-recognized brand along with its user base. That's extremely valuable, no doubt, but getting down to the brass tacks, Uber is mainly an app that connects drivers to riders, and ultimately the riders are very cost conscious. With Tesla's improving vertical integration as well as growing user base, it's better positioned to become a more cost-effective option. And Tesla already has a nice mobile app for its drivers. Adding functionality to connect its drivers and eventually self-driving cars to riders, that's not going to be rocket science. With my overall thesis on Uber, I could easily be wrong. Uber might succeed. Maybe some big partnerships will assist in that path to profitability. But clearly, I'm not willing to put money on it. Now, I'm interested in hearing what your thoughts are. Go ahead and drop any comments or questions down below. And also, if you haven't already, I'd really appreciate it if you just tap the like button down below as well as subscribe to my channel. Thank you.